Hey everyone, and welcome to Talk ETFs, ETF.com's weekly video series. My name is Sumit Roy, and I'm a senior analyst here at ETF.com. This week, I'm speaking with Brian Quigley, who's portfolio manager at the Vanguard Group. Brian, thanks so much for joining me.
Yeah, thanks for having me.
Absolutely. So I want to talk a little bit about this one ETF you have on the market. It's been around since December 2023, and it has roughly $540 million invested in it. It's called the Vanguard Core-Plus Bond ETF, ticker symbol VPLS. Could you tell us a little bit about this ETF?
Sure. The Vanguard Core-Plus Bond ETF, VPLS, is designed to serve as the centerpiece of a fixed income portfolio for investors willing to take more risk compared to the core bond category. VPLS aims to outperform the broad U.S. fixed income market by investing in a diversified mix of fixed income securities, including higher tolerance for below investment grade bonds and duration positioning, an active duration positioning relative to the benchmark. The fund leverages the expertise of Vanguard's fixed income group, which includes over 200 dedicated investment professionals and manages approximately $2.5 trillion in assets.
Does this compare to something like BND, which is kind of like Vanguard's flagship core bond ETF? That's obviously index-based. Then you have things like your intermediate term bond ETF out there as well, BIV. How does this core plus bond ETF compare to those index products?
Yeah, great question. So, well, as you mentioned, both of those are index products. They're passively managed. They're looking to track their respective indices, as closely as possible. Whereas in contrast, VPLS is aiming to generate higher returns through active management and strategic risk taking. VPLS has a wider risk tolerance, including up to 35% in high yield bonds and a duration range of plus or minus 1.25 years relative to its benchmark. While BIV focuses on stability and income, VPLS is aiming to generate a return that exceeds its benchmark.
Gotcha. And where does this fit into a portfolio, Brian? What type of investor should consider adding this ETF to their portfolio?
Yeah, so VPLS can serve as a centerpiece of a fixed income portfolio for investors willing to take on more risk compared to the core bond category. It's suitable for investors looking for higher returns through active management and those with modestly higher risk tolerance. The exciting thing about this fund is that it offers the best thinking across Vanguard's fixed income group, with the ability to lean into higher conviction alpha opportunities when they present themselves. Investors seeking more aggressive fixed income strategies with the potential for higher return may find VPLS as an attractive option.
So, Brian, of course, Vanguard is well known when it comes to index funds. You guys are a powerhouse when it comes to that. But you have a growing suite of active funds as well. So I'd love it if you could tell us what Vanguard's philosophy is when it comes to active management in general, and when it comes to fixed income in particular. Does active work better when it comes to fixed income than it does equities, for example?
Yeah, it's great questions. While Vanguard today is well known as an indexing powerhouse, our roots are actually in active management. Before the introduction of the industry's first index mutual fund, Vanguard only offered actively managed funds, such as Wellington and Windsor funds. Today, Vanguard is amongst the largest active fund providers with a diversified lineup that spans active stocks, bonds, balanced funds, and money markets. And as far as our approach to active fixed income, we aim to outperform the market through a diverse set of repeatable and scalable strategies, rather than relying on concentrated risk positions. We aim to deploy risk efficiently over market cycles to capture upside opportunities while mitigating large downside risks. This approach facilitates more consistent, reliable alpha that compounds over the long term and enables less strain during times of market stress. Unlike some of our high-cost competitors, we do not have to take undue risk to add yield just to overcome our fees. So our PMs have a lower hurdle rate for delivering compelling net alpha to clients. Our teams incorporate top-down and bottom-up inputs from across the team to identify where risk will be taken in the portfolio across sectors, subsectors, issuers, maturities, as well as the overall duration and curve stance of the portfolio. Our active fixed income teams operate within a risk-aware culture. We only deploy risk when we are being compensated to do so. unlike some funds that are always overweight market risk, regardless of valuations, we were very much focused on making sure that the fund is being compensated for the amount of risk that we were taking. And as far as your question around preference for active versus passive fixed income, we've seen that investors prefer active management and fixed income, that demand remains strong, and we expect that to continue going forward. Active management adds the ability to navigate the inefficiencies inherent in the fixed income market, and offers the potential to generate higher than market returns. Active fixed income ETFs will allow more investors to access our investment capabilities in the vehicle that works best for them.
Great. Well, we're certainly going to be keeping an eye on VPLS as well as Vanguard's active suite in general. Brian, great stuff. Thanks so much for your time.
Yep. Thank you so much for having me.